Welcome to Commodities, and here we're looking at gold on the daily chart. And look, as you can see, we're pretty much just sort of vibrating across the 1300 here. And once that's completed doing its thing here, we should see a drop down to solid support at around the 1250, but can move lower. And we'll look at that because that move there should be the same length as that. So we could see it moving down, but there is really good support here. So just drilling into that a little bit, yesterday we were in this little bunch here, and we were looking for a move down into the 1280 and then a bounce off that back to the 61.8 retracement level, which is the 1300. So that's sort of where we are now, and we're expecting that to fold over and move to the downside. But one thing in mind here is that this market is moving with the US dollar, and the US dollar is expected, well, it's moved up the same. If we look at that now as such, just moved up through here, the same as gold has done. And if we just drill into gold here on a smaller chart here, you can see that they've done the same thing. And the US dollar is expected to have three waves, basically this move, another move, and another move. So, just sort of keep that there as a sort of a sentiment sort of thing. The current move up through here so far is in three waves, and we can call it an A and a B and a C, but it might develop into five waves, which would be the 1, 2, 3, pulling back here for 4 to the previous wave, 1 less a degree, and then a fifth wave up there. Probably not the case in gold, but silver looks a little bit like that. If I just move in here a little bit further for the gold chart here, you can see we've got 1, 2, 3, 4, 5 here for the A wave or wave 1, back for wave 2 or the B wave, and then we've got basically had 1, 2, 3, 4, and 5 here for the third wave, or wave C, and finishing here. And then if wave 4 was going to come into play, it would pull back to the wave 4 of 1 less a degree, which is just in here. So that's a real possibility. So it could bounce off here in this area and create another high there. And there's also the US dollar factor as well, with them sort of both moving together a little bit. This is being sold off more so than US dollar at the moment. But look, if this is not a wave 4, then this is wave 1. So we'd see a move down here, back up here, and then moving down. So look, in a bit of a nutshell, if we use, say, 1290 here, wave 4 shouldn't go past that. And if this market moves, it'll come down, it'll create 5 waves down and back up. But if it moves through the 1290 or the top of A wave or wave 1 here, then we've got overlapping wave structures. So we could say the 1290 as a resistance would be the trigger or setup for the downside. Of course, you could catch it earlier than that as well if you want to take that risk on as such here. Let me just have a little look at this here now that it's developed a little bit. So we've got 5 waves here, 1, 2, 3, 4, 5, and that will produce another 5. So we've got 5 waves correction. So this can be an A and a B and a C wave. I need to pull that apart on a 1 minute chart, but it could pretty much, have its little low in here, or it could developing 5 waves down. So 5 waves down would look like this. 1, 2, be the third wave here would be longer than the first wave here, than the 4 and the 5 here. So once you get down here, you're going to get some sort of corrective bounce after 5 waves, and then you'd look here. So if you can identify 5 waves here, then identify 3 waves here, then you can look to short from that point, build the trade in from that point. You could do it now if you wanted to, but there would be a bounce coming back anyway, so it's not like you're missing much, and you probably just get sort of trapped a bit. And also just the fact that this may pull down to this point here, the wave 4 of 1 less a degree, and then move back up from that point there. Because when I look at silver, silver's just looking on the daily chart here, it's had a bit of a different pattern here. It's sort of already done its sort of 5 waves down here, even though that all these structures were fine, except for from wave 4 down to wave 5 here. It was pretty dodgy in terms of counting it, but it's done all the right things in terms of making a new low and all those sorts of things. So it could actually push up from here. So So far it's only 3 waves here, and it's not sitting on $20, the trading level 2 there. If it was sitting on that, well, then would be going long from that point. But we were looking, talking about going long for a short-term trade, rather, off the 1900 here yesterday. So we were looking for, on the 1 hour chart here, a bounce down through here and a move up. So far, the move up here is the same as gold in terms of 1, 2, 3, which can be an A and a B and a C. But I was sort of looking over here, and I thought there might be another little move up to here, still keeping the 3-wave correction here. It's just that this move up here appears to be an A and a B and a C here, in 5 little waves in here. I had counted it to 5 waves being here before, but I don't know, this just looked like a sort of a B wave and more of a sort of an impulsive sort of structure to the downside here. But anyway, what it does do for me is it allows me to have a little push up to here, making a new high above this one here. But look, once again, we couldn't really turn bearish on this unless we had a very clean 5 waves down through here. And the wave 1 is at 1930 there roughly, so we would need to see the 1930 as a retested resistance before we could sort of short there, shorting up here. Possibly, if we see it'll be following gold, so if it does the same thing as gold, well, then you can move in from that point there. But wave 4 in this case can come back to 1940 to this little low here before moving off. So you'd be careful about getting trapped in there. So it can actually pull back to here. That would be the normal thing for it to do, to pull back to 1940 and then move up from there. So be careful about getting trapped at that point. If the 1940 became a retested resistance and you can see the structure, how it's developing to the downside, then fine from that point. Now, the cousin metal here, copper. Yesterday we were talking about if it breaches 310, then we've got ourselves a bullish market here, and that's the case. So now we can expect a consolidation, a classic trading levels pattern at 315. Once support is gleaned on that level, then up to the 320. Now the 320 gives an overlapping wave structure once again on the sort of weekly continuous chart, which I don't have on this particular platform, which just adds another layer of bullishness into the mining sector. It was odd really, because yesterday I was looking at sort of BHP and some other stocks, and I thought, oh, it's kind of, I felt like buying them right on their sort of lows there, but anyway, we can start having a look at those now. So the UK market was obviously got the bigger metal market, but we follow the US because it's the last closing price and have the last impact as prices trickle around the globe. But the UK was led by the mining sector, so that's something to look at, because the SPY and the FTSE, even though the SPY is 10 times, the FTSE is 10 times as bigger in terms of volume, they on an intraday basis they tend to move quite the same. They've got the same sort of internal little patterns. Anyway, the oil market. Look. Essentially, we're just waiting for it to find the 100 as the resistance, and then you can look to short from that point there, because yes, it does count as an A and a B and a C and completed there and so forth, but I was counting these down here yesterday. We've only got like 3 down here, so this wave 2 here that we're looking at could get uglier here, bigger, so let's just sort of allow it to unfold here. The 150 is the midpoint between 101 and 100, so support on that would give it another layer of strength. Excuse me. So just be mindful of that. But look, just sort of sitting there waiting for that to be to become the resistance there. We don't have a nice clean impulse wave to the upside here. It's more like an A and a B and a C. Yes, it could develop. long as it holds that low in through here. But even if it did develop further up here, would still consider it being corrective up through here. So look, it's just a bit of a waiting game on this one here. The natural gas market is weak and can move lower as well. So this is the daily chart here, and I just wanted to point out that I thought we may have had here the 1, the 2, the 3, the 4, and the 5 making a new high through here to confirm, a nice large 5-wave structure up here, and then we'd have an A and a B and a C across the $5 here. That's what I was kind of looking at, but it's not the case, and doesn't mean that's not going to happen. It can still be wave 1, wave 2, wave 3, and wave 4 here, just continuing in terms of an A wave, a B wave and a C wave here. And if it is a C wave here, then it's likely to, well, it will be in 5 waves. We already have 1 and 2 here, so this would be the 3rd here, be the 4th here, and the 5th coming in down here is a flat sort of correction through here and then up from that point. Now, it could move up from that point. It would, but it could move up in 3, coming back onto this trend line through here, and then fading from this point here and having a much larger bear market and taking this low out through here. So we need to be a little bit mindful of that. So what we'll do is we'll allow this to move down here and complete, into these other lows here, and then we can have an A and a B and a C, and we could push straight up from here, but we would need to see 5 waves up through here. If we get 3 here and overlapping wave structures and so forth, then we'll be looking to short here. So we'll tinker with it in here and try and pick up a few little positions here and here. But weakness, we will just straight away change to the short side and look for the longer term bear market. And from here, we'll look further up into the 5 mark up through here. So nothing to do here, is just to wait. And talking about waiting, and that's what we're going to have to do with the grains. Now, with a stronger US dollar, that's as they're traded in US dollars mostly, so there's going to be pressure applied here, and we're looking for, I'll just go back to the US dollar here for a moment just to give you a bit of a picture. Just in a bit of a nutshell, we're basically looking for sort of something like that before we see a move down here. So a bit more jiggling around to go. So if you can sort of bring them back to soybeans here, I don't know, wave force can move sideways and get complicated and so forth. So I don't really know what's going to open here, but this is the same for wheat and corn and coffee, those 3 at least. Well, soybeans, wheat and corn, they're used in most products, so they're all going to be pretty much doing the same in one way or another. So we just got to kind of figure out what they're doing, and we're only kind of, as you can see, we're probably only halfway through the corrections at this stage. So, they haven't matured enough to really call in and give it a strong thing. They're on the weekly, they're definitely overbought on the weekly. They could certainly come back to the 1400 here, because that's the wave 4 of 1 lesser degree, which is here. So these markets can move, lower and take out their current lows. Now, should we short that? I'm not sure. It wasn't something that I sort of planned that much into trading. Trading through corrections as such. We really wanted to use the grains for picking out trends and trading them. And in this particular market, we're trading up to the 1500 and getting out and waiting, and that's our main plan. And we did point out a small trade in here to trade up and get out yesterday. That's it. But look, what I'm saying is that I don't know what's going to happen here. I can't give a clear indication, but with the US dollar moving up, we're going to see pressure on these markets. Look, I don't know. I mean, just these low, anything, if the 1450 became the retested resistance, well then we're going to be going down lower from that point. But even if it was going to happen, it would take a little while anyway. It would take a bounce, so we'd be looking at 1, 2, 3, 4 and 5 here, something like this, and then an A and a B and a C back up, and then moving down through here. So you could probably get it over here if you wanted it, on the short side, or just leave the stop above the 1500 on this one. anyway, nothing sort of happening, and much the same with wheat as well. I've got it in a bullish count while it's sitting above 700 now. If that, and we were looking for it yesterday to move down and cover this gap here, which it has done. It's a bit tricky to count all this in here because it's just not clear enough. Now, look, if the 700 holds, fine, we'll stay with the bullish count. But we want to see support on 720 and 730 and, continuing to the upside. We would look to add on the 720 and the 730 to the upside. The little move that's coming off here at the moment, obviously that's just bouncing off the 700 here, and it'll go back and retest the 720 or supply even higher up here, and then perhaps roll over from that point. I'm not sure because this whole correction here, if I've got a daily chart somewhere, just bear with me for a second. This will do. It's a little bit old, but this is what I was looking for, move up through here. But I'm also aware that, if I'll just move these out the way here, I'm also aware that even though this is higher through here, I'm aware that this can be a B wave here. Let's get rid of this here, and we can get a C wave here as such. I mean, that's the possibility, because this one here is in 3 waves to the upside so far. So if the 700 becomes the retested resistance, that's at the 700, that's the sort of 50% retracement level here. So if it became the resistance here, then we've just got to look at a bigger correction happening across the 700 here. So it means that in one way or another, we're only still halfway through whatever's happening here at the 700, and we just have to wait. So, if some move came down through here, then we'd be looking, waiting to sort of get back in over here for the next run up to 800 over here. So I feel that's the case because, we're above the 650 here, which is important. So look, just a little bit unsure about that because of the pressure on the US dollar, and corn's the same as well. So with corn here, now that it's sort of breached the 500 here this time, it really needs to technically take out this low here to prove this particular count here. But, this does count as 5 waves now all the way up to this point here, even though that was higher here. I see that as a spike here. Definitely correction at wave 4 here and wave 5. So this can be an A and a B and a C. So we're only sort of just starting this correction too, possibly. So, I thought we may push up from here, but the US dollar the other day pushing up there has sort of put a bit of a spike in there. So it hasn't confirmed things that can move down, but it can move down, well, typically to the 480 here, which is the first minor trading level, but the 50-60% is down through here, so that will depend on what the US dollar is doing at that particular stage. But the main point here is that this market is still correcting across the 500 in line with wheat and soybeans, and they can get weaker, and we just have to allow them to unfold. The trades for the upsides here are obviously not ready, and what can we do? We just got to wait it out. So look elsewhere. The coffee market, we were looking just on the 4-hour chart here. Once again, we'd been looking for basically 5 waves up through to here for wave 1. We're looking for this to break the 200 here, and it's broken it, and the first support is at 180, so we'll get some sort of bounce. This is the first leg, the first move down of the correction. So I think it's always just safer just to wait and see if this first leg down is in 3 waves or 5 waves. Look, if this market finds support back above the supply level, which is the 200 there, sure, we'll look to go long then because I've made a mistake somewhere. And that's fine, but as it stands, we're under that level, and we just need to allow it to, have a shot at retesting the supply and developing more of a structure to the downside that we can understand. And so look, nothing cooking here. The sugar market's a little bit different. Because it's been correcting for a long time now, it's not a new correction, so it's sort of advanced in a way. And as you know, we've been looking at this as a as a triangle for wave 4. but we're also mindful that a larger bear market could unfold from this point here. And so this would be an A wave, a B wave, and a C wave, and this unfolding from here in a series of ones and twos through here. But we'll just stay with the triangle while the $17 while the market's above the $17. And with the triangle pattern, it can be complete at this particular low here, but I don't have any evidence of any structure moving to the upside here. With that in mind, this is just the 4-hour chart here. We do have a little push off it. The E wave should be in 3 waves, so 1, 2, and 3 here. So that that's why it can be finished. But like I say, we don't have any evidence to the upside. Evidence would be in 2 forms. It would be, it could be 3 as well. It could be in terms of pattern, impulse wave. It could be in terms of price, like 1750 is a bit of a balance line in this little area through here. So having support on top of that 1750 would shift at least some of the weight to the upside and turn it positive. And the other one is volume, of course. So look, the first step here is the levels, and being above the 1720 is something. The next level is the 1730, the top of group 1. So support on top of group 1 will get the price to the 1750 here. But it's still not going to give us an impulse wave up through here. So what we'd like to see when we trade is we like to see the Elliott and the trading levels and the volume all telling the same story as much as possible, and that's not the case. So even though we've got this tagged here as the end of the structure here, we just don't have any evidence to back that up. Simple as that. So we just need to be a little bit mindful. And this is it here. So I mean, even this move up here doesn't really look. It looks like it's in 3 waves, so it's corrective. So it can be an A B wave in 3, and then a C wave up to here, and then fold over from here as well. And then we've got a bear market on our hands. So that's something we could look on the short side too at that point. On the daily, the market is oversold and can bounce from here as well. So that also supports this being completed here. But like I say, we don't have any evidence up through here as yet. So we wait until the 1750 is the support. You can trade on 1730 if you like, if you see a really nice support there, not just popping its head up here like this. It's got to move up there, come back, test the 1720 again, basically vibrate in this level here and find support there. And then, the bigger the pattern here, the safer the next journey upwards would be. But it could fail at 1750 or 1740 and roll over from there. But anyway, the orange juice market. I see this as the top of a 3rd wave. I know that this whole move up is a corrective rally, and we're looking for a top and it will roll over and move down. But I've always thought that this was the 3rd wave, looking for a 4th wave and a 5th wave up. I just don't think this 4th wave's finished here as such, because the move up through here appears more corrective than impulsive, even though it's above the 160. And this is what I mean here, this move up here, forgetting the spike so much, but basically an A wave, a B wave, and a C wave. So basically 3 waves here, which makes this, corrective for the downside. And then this little move down through here appears to be in 5 waves coming down here. So we would see, an A and a B and a C back into supply area, and then folding down from this side here as well. So just drilling in here a little bit, and this is how I was looking at it. The high here, moving down, it's like 1, 2, 3, 4, 5 here. Then the A, the B, and the C coming back here, and then rolling down here. So if that's the case, if it does test up here, or finds the 160 as a retested resistance here, then you can look to short from here. On the long side, however, if the 163 becomes the support, then there's a basis for the market to retest 165 at that stage. If it's going to retest 165, then it's likely to move into 165, which is the bottom part of group 2, 165, 172, 180, and then it can move higher from that that point, and then we can call wave 4 in and look for new highs at that point. So something to play around with here in the meantime. Okay, that's it. So look, there's not a lot happening anywhere really at this stage. The US dollar, as I mentioned, it really needs to complete its 3 swings here, and then we've got a trend from that point there. So obviously it's going to react from the $80 here, and while it's reacting from here, it will give those commodities a little bit more strength as well. It's not really sort of a mirror image sort of reflection, but pressure does build up on both sides, and buying commodities, you'd kind of wait for a better price, so to speak. Alrighty, cheers.